Hello traders, welcome back to another video. In this episode, we are going to focus on the CRT, the candle range theory, right? So with the CRT, we know that we are going to mark the high of the candlestick, and also we are going to mark the low of the candlestick, right? So the CRT is also known as the power of 3. This means that we normally focus on 3 candlesticks, right? We normally focus on 3 candlesticks. So on the first candlestick, we want to see an accumulation like this, right? We want to see an accumulation like this. As you can see, this is an accumulation. And then on the second candlestick, we want to see a clear manipulation. We say this is the manipulation because we want to see price quickly reversing back into the range. We want to see price quickly reversing back into the range, right? And here we can see this is a liquidity sweep right here. Remember, this is our swing high. Therefore, we can see price taking out the liquidity and then quickly reversing back into the range, right? So this is the manipulation phase right here. So on the third candlestick, we want to see price going back into the fair value gap, fill up the fair value gap, and then distribute to the downside, right? So this is the distribution phase. This is the distribution phase right here. So on the first candlestick, we can clearly see an accumulation phase. On the second candlestick, a manipulation, taking out the liquidity and then quickly reversing back into the range, right? And on the last candlestick right here, we want to see price gravitating towards the fair value gap and then distributing to the downside. And this right here, the distribution phase, this is where we want to take advantage of this movement. This is where we want to take advantage of this movement. So on the distribution phase right here, we are going to look for selling opportunities, right? So we are going to have something like this: accumulation, manipulation, and then distribution, right? Now let's remove all of this, okay? And let's go on a daily time frame. Let's look at the market from a daily time frame. So now we are on a daily time frame. Let's focus on this candlestick right here. So now we're looking at the market on a daily time frame. The first thing that we want to do is to mark our high right here, is to mark our swing high. This is the candle range high. This is our candle range high. And again, we also want to mark the low of this candlestick. This is the candle range low. This is the previous day high, and this is the previous day low. Alright, traders. So from here, price could either take the liquidity above or could take out the liquidity below, right? So we are on a daily time frame. So now we want to move to a lower time frame. You can move to 1 hour time frame or 4 hours time frame, but I want to go on 15 minutes time frame. So now we're looking at price on 15 minutes time frame. Remember guys, this movement is one big candlestick on a daily time frame. So now that we are on 15 minutes time frame, we see that price pushed to the downside, and now price is pushing to the upside, right? This is what we see right here. So what we want to see is price taking out the liquidity and reversing back into the range, right? So this is going to be our manipulation phase right there. Just as long as price takes out the liquidity and then quickly reverses back into the range, right? This is what we want to see. Alright, so price is pushing nicely to the upside. So what we want to see is price taking out the liquidity above. Nice. Alright, traders, remember this is our swing high right here. This is our swing high, and from here we can see that price has taken out the liquidity resting above this swing high right here, right? And we can also see that price reversed back into the range. This is what we want to see. We see an accumulation phase and manipulation right here, price taking out the liquidity, and then price quickly moved back into the range, right? This is what we want to see. So the second thing is to see price moving back into the fair value gap. Right here we have our fair value gap. We have a fair value gap right here. So we want to see price filling up this fair value gap, and then we are going to look for selling opportunities right here, and this would be our target. So the swing low would be our target, and our stop loss can be just above this level right here. Okay, so now let's wait and see. So now we can see that the fair value gap has been filled right here. We can see that the fair value gap has been filled. So now let's just wait and see what's going to happen. Price is moving nicely, pushing nicely to the downside. We see price is pushing nicely to the downside right here. Remember, our target is the swing low. Our target is the swing low right there. Price continues to move nicely to the downside. Nice. Boom. As you can see, our TP has been hit right there. Our TP has been hit. So this is simple, guys. This is the CRT model right here. We can clearly see the distribution phase right here. This is our distribution phase. And then here our manipulation phase, taking out the liquidity, price moving quickly, price moving back quickly into the range, and then again filling up the fair value gap and then distributing to the downside, guys. This is what we want to see right here. Alright, traders, as you can see, the setup is complete and the setup was perfect. And of course, ladies and gentlemen, this setup does not play out every single day. Just like any other strategy, it does not work every single day, right? But this is a very powerful model and you can make a lot of money by applying it properly, right? This is called the power of three, but you don't have to necessarily rely on 3 candlesticks. You can wait for your setup to be complete. Doesn't matter how many candlesticks it takes. Could be 5, could be 10 candlesticks, just as long as your setup is complete, guys. So this is just a short version of the CRT. I will make another video explaining in details. So we are going to dive deep into the CRT, guys. So for now, happy trading. I'll see you in the next video.